welcome to this weekend's edition of Taking Stock. This is the show where we do a quick check on what took place in the week went by, and we give you some important cues to watch out for in the week to come. I'm Sonia Shenoy, and with me as always is Anuj Singhal. Anuj, not a bad week for the market, up 2% for the index, up 6% for the IT index. So a lot of buying is what we saw, and at least the despondency that we ended last week with, some of that has ebbed this week.
Indeed, Sonia. So I think there were 2 or 3 themes. First theme was, as you said, the IT sector did really well. In fact, towards the end, pharma also started to contribute. So I think at least the leaders, the erstwhile leaders of the market, one part of that is doing well, which is pharma. The other part is still not doing well, which is the Bank Nifty. The Bank Nifty is still underperforming. So I think there's still money shifting from banks to IT and pharma. The second theme was that after a lot of outperformance, the mid caps took a bit of a backseat, and this week was about large caps taking over. The Nifty and the Sensex outperformed outperformed the mid cap index. So that's something that you need to watch out for. And finally, in the broader market, Sonia, the earnings were not really as bad as the fear was, and that was reflected in the way the stocks reacted, whether it was Jubilant FoodWorks, whether it was Voltas, whether it was Punj Lloyd. A lot of these trader favorite names did well. A lot of these stocks were at lifetime highs after the earnings, which is telling you that the market is happy to reward you if the earnings are good. But from the overall market point of view, I still believe that the Bank Nifty really needs to come out of its slumber if the market has to go back to all-time highs. Till the time that happens, it will be a bit of a struggle.
Indeed, some amount of the sentiment got soured on Friday when SBI reported its numbers, and the fine print was not so encouraging. But be that as it may, let's get 2 of our guests into the conversation now. Joining us in the show today, we have Anuj Jain of IIFL Private Wealth Management, who will talk about the technicals. And on the fundamental side, Tirthankar Patnaik, India strategist at Mizuho Bank Limited, joins in now. Welcome to both of you. Tirthankar, I'm going to start off with you. This was also the week where we celebrated 1 year of the Modi government being in power. What has your own assessment been of the government? Were you disappointed, or has it gone as planned?
My sense is that when a new CEO joins a large company, people do give him about 4 quarters to perform. And I guess from that perspective, the expectations from the Modi government have to be seen in that light. There has been a lot of print and media commentary about how the Modi government has performed. My own reckoning would have been that they have done fairly well. The economic conditions that India was in 2013 are quite a world away from where we are right now. Our fiscal balances are well under control. Our current account deficit is well under control. The currency is fairly strong, barring the recent weakness. Our reserves are at $350 billion. So from that macro turnaround perspective, how much ever we want to attribute it to Modi government or not, things are definitely much better. My assessment is that I guess they've done fairly well. From the other side, in terms of governance, in terms of putting things in place, also the Modi government has fairly performed. I guess what was missing in the commentary that is there on the first year is that there was a lot of look back to how things panned out rather than guidance one would expect from the government over the next couple of years actually.
Okay, Tirthankar, what are the odds that this market will go back to all-time highs at some point this year and in fact make higher highs? And obviously that means that are we still in a long-term bull market?
My sense is that there is there's a tug of war between medium-term impatience with what is happening on the macro, what's happening with the markets having performed very well in 2014, and regional peers like China having performed much better this year than the Indian markets. I guess that's on one side. On the other side, there is a strong macro recovery playing out, which is a multi-year cycle, and which is why the reason most people talk about a multi-year bull run in India. And this year started out fairly well, picking up on the momentum of 2014, but that has fizzled out a little bit. My own sense is that it's fairly high odds that we might see lifetime highs for the markets within this year, very well within this year. Of course, the factors I would be looking at would be how the central bank essentially rewards us with interest rate cuts. Market is pricing in about 50 basis points. Anything higher should be fairly good. The second point would be how the southwest monsoon really pans out. Things are slightly better off than on the food front than they were last year. But yes, that will be something that the market will be definitely looking at. Thirdly, the Fed rate hike, when it's happening, what's happening, any kind of clarity there will also pan out with the market directions over the next couple of quarters. And lastly, of course, earnings recovery. One did not expect much from the fourth quarter earnings period, but first quarter, second quarter, people would want to see earnings recover. I guess these four factors are what would drive the markets over the next 4 quarters in the medium term. But like I said, I mean, we should see lifetime highs this year.
Okay, that's an optimistic view coming in. A high probability of lifetime highs by the end of the year. Let's get Anu Jain of IIFL Private Wealth to give us a slightly more near-term perspective. Anu, welcome to the show. You know, this week, the good part was that we moved to the upper end of the trading range and closed at that 84.50 odd mark. Do you think this uptrend will continue into next week?
Well, as long as you're holding the 83.30, because you saw all the kind of short covering and long build-up happen when the Nifty managed to hold and close over 83.30. Now, the range would basically be 83.30 at the lower end, or rather the stop loss of this move, with 85.50 as the top end of the range, because if you draw a channel which is coming down, a falling channel, it's 85.50 onwards where you would actually say that down move of Nifty would now start getting bullish. So that would pose to be a very strong resistance in this current move. Actually, 84.60 to 85.50, that whole 70-point zone is resistance, which we saw even on Friday, that having crossed that closer to those levels, it kind of came back. So would basically see that that is going to be a range. So till 83.30 is not breaking down, the move would be on the positive or sideways side. And we saw the contribution at least in the week coming from banking till Thursday. Friday, obviously, after SBI results, there was a drop down everywhere. But IT has continued to give in, and Pharma, as Anuj was also saying, has started giving in. So I think there is a possibility of us attempting that 85.20 to 85.50 during next week. And with expiry being closed, it will be slightly more volatile, but the chances are that you will probably be upward biased than downward biased.
Anu, hi, welcome to the show. Since you spoke about the Bank Nifty, which had good rally till Thursday but gave up gains on Friday, the Friday move intraday was quite brutal. Do you think that changed things a bit, or does the Bank Nifty also remain in a bit of an upward, upward trend? And what kind of targets would you give now for the Bank Nifty?
See, the logical move once it was crossing 18,400 was 18,700. So during Friday, that's the move it attempted, and that culminated with the SBI results where there was an initial euphoria. So from there, it came back and closed down about 400 points. Now it has to regain 18,400, 18,420 for it to really get momentum. But as long as it stays even over the 18,150, it's in a neutral zone. You're not going to see. Where the hit actually came was the PSU banks. Now PSU bank, the index was on Thursday, it closed at about 3591, and the 50-day moving average is about 3560. So holding 3560 was quite important for momentum to build in. Obviously that got zapped out once the SBI result came, and it's closed a percentage below the 3560. Now the whole thing is SBI itself has closed at a support level of about 278, 280. So breaking that for further, because it's moved up to 300, come down to 280, I think it's going to be slightly difficult to break the 280. So you may see this index going sidewards for a couple of days and then probably trying to reclaim a higher level. But since most of them are support levels, even if you look at the PSU banks which gave up today, whether it was a OBC, closer to 200 is support level. So most of these banks are at support. We do have positive biases on Axis, we have positive bias on Kotak. So those could probably lend support and not break down the Bank Nifty further down from here. So I would say yes, slightly sidewards for about a couple of days, and maybe then pick up once it crosses 18,400, 18,420 again.
Okay. Tirthankar, you were telling us about the possibility of lifetime highs by the end of this year. What pocket do you think could take it there? Will it continue to be banks? Because over there, we're not seeing any concrete signs of a recovery, especially with some of the bigger banks like SBI.
My guess is that any lifetime high movement of the Nifty would have to be led by banks. Financials are one space where one has seen a significant amount of pain. One continues to see so, although the prognosis becomes brighter and brighter as one goes into fourth quarter and then first quarter results in FY16. One would expect PSU bank numbers to be better. And so therefore, yes, I mean, short answer, it would have to be led by the banks when the index reaches lifetime levels, especially lifetime high levels, especially public sector banks.
All right, we'll take a short break, but we'll continue this discussion on the other side of the break. In the meantime, let's listen into some market opinion that we heard through the course of the week. We'll come back.
If you talk about the investing community, those who are looking for 3, 5, 10 years, I think they are committing continuously. And they are quite excited about hearing about what's happening in India, how much time will it take. Now they're asking what's our view in terms of when can it happen, how it can happen. So, I mean, now they are coming down from the promises to really performance thing. So, as the performance comes, see, what it clearly means is that first thing is there are not many investment alternatives. Second, that India is a very, if India performs, and whether India performs or not, the companies which performs in India, I think they'll get enough buyers. So, I mean, whether it is 6 months away, I mean, generalized economic growth, how far it is, nobody knows, and nobody can predict. And when it happens, it happens.
Sometimes what happens is the expectations have been ahead of the curve, and the valuations of the markets accordingly are ahead of what the ground level or the basic fundamentals are. Markets have discounted the expected uptick in advance, and we believe that the turnaround in the economy per se would take longer than expected. Maybe it could be at least maybe 4 to 6 quarters ahead of the curve.